Hello everyone, this is Jerry Broussard, and just thought I would reach out today and do a video based upon the market volatility we've seen last week and today. Did speak to a few clients and I got a few emails, so I thought I'd kind of give you an idea of what I'm seeing and what I believe is going on and how it might affect you. First thing we want to take a look at, and this is not going to be a long video, I just want to give you a quick couple of thoughts to think about. Is that I have a chart of the S&P 500. This is a weekly chart, so basically this means we can get a bunch of years into one chart. So I'm going back all the way to 2011, and what I want to show here is that the market is going through a correction right now, and a correction is considered when the market drops more than 10%. And as of the close today, we're down right about 11% from the high. We're down about 11% on the S&P 500, so that would qualify as a correction. Not too sure if it's going to continue or if it's going to stop right here. We'll talk about that in a second. But what I do want to stress is that this is somewhat normal market action, albeit we don't like to see it all happen within a week or 6 days that the market takes a pretty good dive like it's been doing. But looking at the chart here, you can see the market has done this over the last few years. Even after it's been moving higher, it did pull back. Back in 2011, the market pulled back 18% during that middle of the summer of 2011. It took about 3 months to do that, and then once it was done, zigzagged, it turned around, ran back up. We had a pullback in 2012. Actually, we had two of them, a 9.8 and an 8.8, and the market moved up higher. These little zigzags are all less, or somewhere around 5% to 3% zigzags. And then October of 2014, we dropped a 9.8%, and that wasn't too long ago. And right now we're in a pullback of roughly about 11%. Now, a couple of things are causing this right now. Number one is the market's had a pretty good run up over a few years, and typically you will see a correction of about 10% every 18 months. In this case, we had not seen one of 10% or greater since 2011. So that's 4 years, which is quite a long time without pulling back and correcting. And this is considered a correction. It's not considered a crash, so it's what I would consider normal market action. It's not fun to watch, but I believe that it will be short-lived, and the market should continue higher. Now, a couple reasons why this market's pulling back like this is, number one is that China came out with some information that their economy was slowing. We kind of all believed that. Everyone did, I believe, but they actually put it out in writing, and that was a little shock to the system towards the end of last week. Oil pulled back again, and it has been kind of hovering in the 40 range, but it pulled back pretty drastically, primarily again because of the China issue. The world felt that because China was slowing down, it wasn't going to buy quite as much oil, and so oil pulled back, and that caused the market to pull back as well. And the third thing is interest rates were announced that they will probably raise interest rates. The Fed will very shortly, and so that's just given the reason, I think, for the market to take a rest and to correct. And that's what we're going through. But what I do want to stress is that this is not a 2008 market crash, nowhere near that. A couple reasons I say that is that during 2008, we had a lot of problems, bank problems, but more importantly is we had growth problems. The economy was not growing, and it had not been growing for quite a while before the market crash. In this case, today, we're seeing healthy growth going forward, and sometimes it slows just a little bit, but we're still growing. The jobs numbers are improving, and overall, the economy is doing very well. So quite a few people I did speak with actually today have the right mentality, and they were talking about, like, what can I buy because it seems like it's on sale. During a stock market correction is typically what you want to think is the time to make some adjustments, maybe, and actually purchase something, not actually sell it. And the reason I say that is that if the market would not, or the economy would not be growing, that would be a different story. But with the economy growing nicely, this is just what I would consider a market correction. Now, how deep will it go? I don't know. We're at a support level right now, and we'll see if that can hold. If it does trend lower, again, I don't know if it's going to last very long because of the deep sell-off. I think it might spring back fairly quickly, but I would come back and do a quick video as things change. But I did want to stress and mention that this is not a crash. I don't see it as a crash, so don't consider it panic time. It's just one of those days that's best not to watch the news because they like to make it worse than what it seems. And I do agree that a 10% or 11% correction in the market is painful when you're watching your account, drift lower, but it will recover. It always has, as you can see over the last few years, and it will do it again. So please, if you do have any questions or have any concerns, reach out to me, call, email, text, and I'll be glad to visit with you and give you my thoughts, and we can make sure that you are in the correct portfolio so that you don't feel too much uncertainty when things like this happen. And if you have any questions, as I mentioned, just give me a call. Thanks. Take care.